These financial habits will change your life. Financial habit number one that'll change your life is to budget. So I tend to not be 100% pro budget, but I do think there is an important factor in understanding where your money is going and making sure that your money is going to the things that you actually value or add value to your life. If things aren't adding value to your life, why the fuck are you spending money on it? Just that simple. Why buy $6 Starbucks if you are just as happy with the Starbucks you make at home for 50 cents? No offense to Starbucks, I love Starbucks, but kind of ridiculous. So having an understanding of your budget from what are you spending on fixed expenses like home, rent, insurance, any of those things, having an idea of where your discretionary expenses are going, like Netflix subscriptions, things like that, and other fun expenses like just going out to eat, going to parties, things like that. Having an idea where all your money is going, that's super important. Having a budget that can track that either via a budgeting app or something of that nature going to be super valuable towards growing your wealth and changing your life. The other factor though with budget is don't use it as religion. That's my personal opinion. Make sure you understand where the data is going. The moment you try to get too restrictive, for most people, kind of like a diet, you cut your calories, next thing you know, you're down in a bunch of ice cream and pizza and getting fat. So same thing happens with budget. The moment you tell yourself that you can't buy something, then everything goes to the wayside. So be understanding of that you're a human, that your budget is a goal or set of goals. It should not be a painful thing to budget. It should be just basically making sure that your money is actually going to the things that you value in life. And there's no discrimination on what those things are. It's just you have a finite amount of money coming in, at least for most people. You have a finite amount of money coming in. Make sure that money is going to the things that you value the most. Item number two that will change your life is paying attention to your debt or managing your debt successfully. So I disagree with people like Dave Ramsey in this regards, where debt is evil. Debt can be a very useful tool, but if used responsibly. If you're racking up credit card balances to fund a lifestyle that you cannot afford, that's a problem. If you can't afford your lifestyle, then you need to take a step back on your lifestyle, build some habits and processes that allow your money and your cash and your wealth to grow to the lifestyle that you want to live. But to do that, it often means opportunity costs and sacrifices. So if you're spending more than your means right now, take a step back, control your debt, and get into a situation where you can't afford your debt. But using debt for things like investing in real estate or growing your wealth as a tool can be super valuable. Like, for example, I'm a business owner. I will happily take debt that costs me 10% interest rate if I know I can get way more than 10% in return. I would do that all day long. And you got to think of that debt as a tool, but it's a tool that needs to be used very carefully, very responsibly, where you can pay off that debt safely and securely. But debt as a tool, for example, again, with real estate, there's no rush to necessarily pay down your mortgage if you're on a 3% interest rate. Well, right now, inflation's 10, 15%. And if inflation's much higher than your interest rate, you're actually mathematically making money by having that debt, because every dollar that you pay that debt back with is cheaper dollars. So therefore, you're paying money, or you're making money by having debt. So debt can be a useful tool, but you want to make sure you use it carefully. And if you are in a problem where you have more debt than you can handle, you need to create strategies like debt avalanche, those type of debt repayment strategies, where you can pay off highest interest rate debt first, or pay off the lowest payments to get some psychological wins. There are a lot of debt strategies out there that you can employ to get rid of your debt, but taking steps to make sure debt is not a burden in your life and it is a tool in your life, having that mindset shift will change your life. The third financial habit that will change your life is living within your means. This is extremely hard these days with Instagram, YouTube, TikTok, all these people flashing Lamborghinis and things that make it look like it's so easy to live a lifestyle way outside your means. And everything's become around like, hey, let me go to this concert, take a picture, share it with my friends, and show what a cool life I live. Well, they may be racking up credit card debt that they can't afford to maintain the appearance that they're wealthy or that they can have these experiences. Where the way to actually be able to afford those experiences is sacrificing a little bit up front to build the wealth and build the cash flow where you can live those experiences without the problems. If you start by living those experiences and not living within your means, then you create a problem that you have to dig out of. And so by digging out of it, you're always, maybe 2 steps forward, 1 step back, or even worse, 2 steps back, 1 step forward. So you want to make sure you build the wealth first, or put in tools, processes, ways of being able to afford it before you live a lifestyle outside of your means. Financial habit number 4 that you should definitely put in place is having an emergency fund. So this is, to me, is critical 101, but an emergency fund doesn't necessarily have to just be money in a bank account, especially with inflationary times. Having things like debt available, like if you have $100,000 of credit available and have a good paying job, well, if an emergency comes up, well, it's not a big deal because you can just put it on credit because you have it available. But having some cash in the bank is going to be valuable. And some good rules of thumb are, 3 months of expenses. If you're, have a 2-income household, if you have a 1-income household, 6 months of expenses. You'll also, maybe want to give some factors and adjust if you, are a highly employable person. If you're, a person that has basically 2 options for jobs available because your job is so specific that, you and one other person are the only people that do it in the world. Well, you may want to take some, considerations before, having a very light emergency fund, just because it's going to be harder for you to get a new job. If you can get a new job in 2 months, you'll know this. Like, for example, if you're a software engineer, there's a lot of jobs out there right now. So really taking stock of your employment, your costs, things like that, but also looking at your availability of debt and credit. Those are going to be super valuable as an emergency fund as well. Like if you have $200,000 worth of investments and you have a margin loan, well, you can borrow, up to 70% of that. So you have a lot of credit availability. So you don't necessarily have to have it in cash, but you need the ability to pay for things or get cash quickly. And that's where good, reliable credit, so debt as a tool, or cash in the bank. Those are basically the most valuable things, and some rules of thumb around keeping an emergency fund. Habit number 5 is automate everything. So automate saving, automate investing, and you should be investing pretty much every dollar that you don't need to live your lifestyle or basically have an emergency fund. Get that money invested. That's how you build a lifestyle, build wealth that allows you to upgrade your lifestyle without, sort of impacting your day-to-day or getting in a financial burden. So you need to build wealth to be able to do that. That's what gives you the financial freedom and the tools to break away from your 9 to 5. And the easiest way to do that is by automating everything. You know what your expenses are going to be because you have built a budget from habit number 1. So you know how much net cash flow that you have each month. So if I know I have $1,000 that's coming to me each month that I'm not spending, well, set up an automated transfer to an investment account and get that money invested every time your paycheck hits. That way, when you're going out spending, you sort of have a scarcity mindset where you're not worried about that money, hitting your account or not because, well, it's not there. So it's already been invested. You can't spend it. So one, helps from that standpoint, but also then investing on autopilot, you're not getting emotional about when to invest. It just happens. So you can ride the waves a little bit better, ride the volatility a little bit better. And all these things kind of go into making sure that your wealth is building and growing on a steady cadence, because steady consistency is going to out-trump any amount of intensity. So make sure you're automating and make sure you're investing any of that stuff that you automate. Any spare dollars from bonuses too, that you can't necessarily automate, but any of those, make sure you're getting invested as well. The last financial habit that you want to definitely make sure you have in place is understanding your credit score and maxing it out and improving it as much as possible. We live in a world, especially in the United States, that benefits the debtors. So if you have money, borrow money, anything like that, you want to have a solid credit score. The reason for that is, especially these days with real estate prices, the higher your interest rate on real estate, the more actual dollars you're going to spend to buy a house. And that applies for anything you buy. So the lower your interest rate, the more money you save, the more money you can invest, the more you can increase your lifestyle, the more you can have financial freedom. Well, the opposite is true. The higher your interest rate is. And people that have high interest rates are the ones that have bad credit scores, because the bank's going to look at you and think, hey, this person's not very responsible at paying their debt back, so therefore I'm going to charge them a little bit more for taking that risk. So if you have a good credit score, the bank's going to be like, oh yeah, this guy's easy to loan money to. This is just free money for us, no risk. Well, if you have that situation, they loan you money, you pay a low interest rate, and then you get to keep more of your money in your pocket. So this is going to apply for everything: student loans, mortgages, etc. So you're going to pay a lot of interest in your life. You're going to pay a lot less interest in your life if you have a good credit score. Hopefully you found value from these financial life habits. Make sure you tune in for more insights onto building your wealth, keeping more of your wealth, and investing. But until next time, cheers.